All right, let's get into it. I'm waiting for a sell here. Pretty simple. Price is moving down, and I'm looking for ways to continue moving down with it right now. So maybe we're gonna break these lows right over here. Oops, let's remove that, put that on. Stop loss just above these highs, gonna be about 30.9 pips. And yeah, now let's see if we can get that resistance form. If it can create a resistance there for us, would be nice. See, it's still kind of pushing up there. Pushing up there still a little bit. But I want this candle here to close bearish and then break those lows. I think would be nice. But let's just see. It might be a bigger console. It might just be from here. So price might actually end up retesting 42,114 and then break the lows here by 4209. And there's gonna be pretty good move here. I think we're gonna have a pretty good day, and then and then we can move over to the next trade. Hey explorers, good morning. Yes sir. Huge bearish momentum came in today. Don't know what Mr. Powell said yesterday, but we're gonna see if we can find that out. It's something Powell said, making that daily candlestick come down like this today. So we'll wait and see. Maybe this could be a pricing in too, but as long as we're bearish, we're gonna be looking for sells. See how candle's about to close here, 14 minutes. Maybe the next one's gonna give us. So what I'm visualizing here is that the next candle is going to do this and then start coming down. Maybe it's gonna create a bit of structure and then break these lows to continue pushing downwards with the current bearish momentum. So that's currently what I'm anticipating here today. See if we can now get that bearish close. Then that will become that resistance. There's some clean range on the 5-minute if it moves up. Right here, if it breaks. It's like doing a shotgun play, but it's a counter trend move against an 8 SMA. But there's a range here of about 43 pips towards like 42.18. So maybe we're going to use that as a liquidity grab Confluence now. See, now it should just rip down like crazy. That's like one of those really bad liquidity grabs. Yeah, you can see it on the 5-minute there. Okay, let's see. Boom, boom, boom. Nice. Come on, Goldie, give it to us. We want this one. We want this sell. We just got London open as well here, so got London open volume. Clean range on the 5 to move down there. So I want to see that 5-minute liquidity grab. You see how it's taking out these highs? That's taking out these highs with that 8 SMA. Got a little support here, a little accumulation. So we got clean range over here for price to come down towards TP. So we just need to get through these wicks. We just need to break those wicks. Because once we break these wicks, I would not be expecting candlestick to come back up here like this. Should respect this zone and then continue to push downwards. So it would be nice if we can get that. We got that nice little 8 SMA Confluence there on the 5. We're going to have the 15-minute in our favor as well. We're going to have the bearish trend. And then we're going to sell off to the higher time frame rejections down over there. But I think we can get through them for sure. In the secret WAP database, this setup here has a 86.789% chance of being a profitable trade, according to the super secret equations that we have. So now we have to wait for candles to break the lows. All right, still warming up. Head and shoulders on the 5-minute also. Oh, nice. Oh, good one. Yeah, we got it too. Got it here. This thing needs to rip. Please rip. There's a lot of nice confluence here for this one. It's like, let's see. It's a pretty big range from here to here. So it might have some candlesticks first play around that area for a bit. It's like when you're in the NBA and someone's coming to you. You know, someone's coming to you. They want to go and shoot the ball in the hoop, and you gotta block the guy. So now you got Steph Curry coming at you right now. So you gotta see, okay, how can we get the ball from him now? All right. So we just got a new 5-minute open. Oh, I don't know if this 5-minute is just gonna bleed. It's already bleeding. Bleed, Goldie, bleed. Need to wait for that break. Dun. Yo, give us a strong break. All right, guys, I got triggered in there. Let's go, Spartans.
Spartans! What is your profession?
It would be nice if we got the fresh 5-minute, because this one kind of extended, but I think with the volume, you can still see it bleed off. This is what I mean by extended, because it came all the way from up over here, so it's already done about 48, 50 pips. So it would be nice to see a new 5-minute over here open up and then continue to push down. Let's go, Goldie. Believe in you. All right, you guys up like about 20 pips here. Stop loss to break even. Risk-free trade. Stops to BE. See, now in the 5-minute, I just want to see this thing continue to bleed off here at this point. Oh, come on, Goldie. Always 20 pips. Hey, congratulations anybody who's like secured something there. Yeah, that's it. That's the only thing right here. Oh man, come on, Goldie. She's using the 16 pip stop loss. But anyway, pretty good move. This is a nice setup. These are like the setups I really like. When I come onto stream and I just see it immediately, about 6 minutes into stream, already execute on a trade. So up for the month, like about 4% here. So let's see how we can end off this month. Boom. Get maybe 15, 20%. Small profit. Nice. Yeah, I'd have secured full there if it was a 16 pip stop loss. But I've been so used to having so much volume of late. Oh, fuck. Something shocked me there. Let's see the news. Gold retreats from 6-week highs on profit taking. Gold fell to 42.10 per ounce on Tuesday as investors took profits after prices reached a 6-week peak on Monday, amid growing expectations of a US interest rate cut next week. Traders currently assign an 88% probability to a 25 BPS reduction at the Fed's upcoming meeting, reinforcing by weak US economic data and dovish comments from the Fed officials. Investors' focus now turns on Fed Chair Powell's remarks later today for further clues on the central bank's interest rate trajectory. But I noticed a trend here on gold with the whole 20 pips pushes. Maybe I should just I close my stops at 20 pips anyway. So I don't know if I should bring that down. Anyway, we'll see. We'll see. Gold has just been moving crazy this year, you know. It's like when we get moves, they just move insane. Like we took these sells over here. So I haven't really been worried about take profits being hit because of just the amount of volume that we've been having. But when something happens in the market, let's say if it happens like 2 times, 3 times, it starts to build a trend. And the sooner you like pick up on the trend, usually the better for whatever kind of smaller adjustments you need to make. Yo, what's up, Tall Trader? Good morning. Oh, it tapped 65 on the 5-minute range. Let's see. Let's put it right here. Oh yeah, right to the T. Man, right to the T. That's true. Oh, it was a profit taking, high confluence profit taking area. Right there. Nice one, nice one. See people paying attention? Very good. Let's see. Yeah, let's see what it does now. Did a small little fakey over there. That was a small little liquidity grab for this move down here. And now this is potential liquidity grab for this move for price to push upwards. What's new? What's new? What's new? New crypto cap symbols added on TradingView. Will Goldie reach ATH this week? Like, you know, I don't know what Powell said yesterday, but I don't know if this is a pricing info price to move upwards, or was there some... let's go check out the website. Let's go see if probabilities shifted over here. No, it's still at 87.2%. So, yeah, we should still see price move bullish towards a 4,400 over there. That's gonna be the psychological mark that we need to get up to. 4,400. See, the daily is now flipping, right? It's down. You see the bias is changing. It's saying waiting. So we're gonna see if this is just a daily bottom wick to reflip to continue pushing upwards. Dun, 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 dun. Still trying to mop up that range. Man, but it like did a brutal fake out for those buyers right over there at first. Because this was the range I was trying to correct, but it looks like it came down, took out stop losses, filled up the range to 65. And then it had that reaction. Also entry sell confirmations. You see, there's always sellers and buyers in the market, chat. Like, it just depends on how you see it, right? If you're going to see like multiple angles, then you can see the buying and sellers in the market. But if you're just too fixated on your own biases, like you're going to say there's a fair value gap here, then, you know, it's a damn shame. That's what that is. It's a damn shame. Because like buyers and sellers here make money, right? So you just have to see where you currently are in the market and what sort of opportunities and confluences you have. How I can get this indicator? It's in the description box. It's a free daily bias indicator. That's what it is. Yeah, but you see, so super different from yesterday's. Yesterday's trade came in like so late, literally like towards the end of the stream, and this trade came like in the first 6 minutes. You know, so it's every trade is going to be slightly different. Some trades are much more easier to see than other trades. Let's see, you got another range here about like 61 pips if you break above this resistance over here. But these are the 2 points that price is now trying to get through, since it's already kind of like mopped up this range down over here. See, there's like not too much room left for it to push down like towards that next resistance as it hit that 65% mark. And then this was also a retracement from, you know, entries earlier on. We had like seriously crazy moves this morning, and then price retraced, and then it was supposed to keep coming down, but might be the daily lows over there. I think we're by the New York session. No, this is like Asia lows. It's like next to the Asia lows today. So now this is kind of like the playground, right? This is where you're kind of looking for positions within this area. Most likely you're going to stay in this zone up until like pre-New York. Most probably. It's like a 228 pip range. And you have these clean traffic zones like in between here. But I think the really nice clean buys would be somewhere around like 42.18-ish. Because there's a lot more space to move up, like 60 pips. The sells are looking like we just need volume. We seriously just need volume, like pressure and volume to push through these levels. Because when the market is looking at these zones over here, it's like definitely a lot more resistance. It's an area of higher resistance, and money likes to flow in areas of least resistance. So here we got like quite a bit. With those wicks, you see wicks over here. We got support over here. But also this range is not the biggest, but it's pretty decent for price to move in. And now we can see price is just consolidating, and it's basically building character for people right over here. That's what it's doing. So if you're following price action, you got a little fakey here, a little fakey here, a little push above here, and then straight back into drawdown. So that's what we call building character. A good thing about building character is when you hit rock bottom is a pretty sturdy place to build. So this is gonna help you really build good character when you are at rock bottom. Yeah, because this is something that I would find myself in a lot in the first year, was maybe trying to buy, fail to buy, try to sell, fail to sell, hold the sell for too long, try buy, holding the drawdown on the buy like this, hoping it plays out now. So it's always like thinking about the other guy, thinking about the other trader, right? Because I think that the more you know your enemy, the better your trading is going to become. So even when you're not trading, you're just kind of like paper trading, right? Like if you're just on the chart like this, you give your trade a little shot. You start paper trading, I think it's pretty nice. Like right now, I don't feel the need to take any more positions. Like that's pretty much me for the day. For the day, maybe. Yeah, I think pretty much for the day. Because I don't need to. I don't need to like prove anything to anybody because my results speak for themselves. I just take 1 or 2 trades a day and that's about it. I don't find a need to take any more than 1 or 2, 3 trades maximum per day. Like it doesn't give you any more benefits. It's like going to the gym. If you look at the studies, it says if you go to the gym maybe 2 to 3 times, there's not necessarily any more benefit beyond going to the gym or hitting a certain muscle group 2 to 3 times a week, right? There's no, based off the science, there's no real benefit. So you're just using more energy and you know, you're not getting anything really more out of it too. And that's the same funny thing as in trading. Literally like you take like 1 or 2 trades a week, a day, and that's it. You're gonna compound those muscles a lot better. You're not gonna have no muscle fatigue. You're not gonna have no injuries, unnecessary injuries that put you out for a while. You know, you guys taking like some losses over there, which now you gotta make back for the week. So you're spending your weeks and days making back losses instead of like actually having efficient workouts on the charts. Gotta have 1 or 2 trades a day, and that's it. See, that should make you feel good. Because knowing that there's no more benefits past that 3rd point, necessarily past that 2nd point even, should make you feel good. It makes your life a lot easier. Imagine, out of a whole week, just gotta go to the gym 1 or 2 times. That's it. Just 1 or 2 times. Find the energy to do it for 1 hour. Just like on the charts. You come on the charts, you're on the charts for like 2 to 3 hours or maybe 1 hour, a few minutes. You just got to find a way to take like just 1 trade per session. It's a lot easier to be disciplined when you think about it that way. If you think about yourself coming in here and then leaving like, let's say here, right? So you know you have this much time to just remain disciplined, to not rush anything, and then wait for your setup. Just between this point and this point, that's it. But you see, the problem is like when you're trading with no end in sight, so when you don't have that part, how are you going to find discipline? How are you going to find consistency? You know, that's not fun. That's not fun. Imagine going to the gym and not having an end to it. It's like, damn, when is this week going to end? You know, you're going to start disliking it. You're not going to build a routine, but you know you're going to hit the gym like, let's say twice a week. Like this, you know there's an end to it. You do 1, you're already halfway there. So it's much easier to do the other half. Right? So you don't have to overtrade. You don't have to feel like you're missing out on moves in the market just because of X, Y, Z. Because that doesn't exist. The volume in the market will never go away. There will always be plenty of opportunities to make money. When I was gymming, best for me was 5 days per week was perfect. I did do legs. Yeah, but per muscle group, probably like 2 to 3 times max per muscle group. So yeah, you could gym like five times a week. Monday, Tuesday, upper body. You know, Thursday, Friday, lower body. Some people even go to the gym every day. But I think those guys just like the gym. I don't like the gym. I feel like it's work. So it's like, it's a place for me to pay my dues. That's all that it is. Just like trading for me. Trading for me is a place to pay my dues. I don't necessarily like to trade. I like the results of trading. Just like I like the results of gym, but I don't like to gym. But I need to put the work in because shortcuts don't work. Shortcuts are the most stupid thing that you could ever do. Just put in the work, pay your dues, get your results. You feel a lot better that way. Then it became easy to you. But yeah, now it's trying to boom, 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 little break and retest right over here. I think it's because the Asia session was super bearish. That's why we got a pretty nice dump over here. Dude. I did the buddy system. I know it's old school, but I have a gray beard, so it's okay. Don't mind me, lol. I may or may not have misheard what you typed. How can you control yourself not to open more than 2 trades? How can you not control yourself to not open more than 2 trades? Imagine you are a company and the company relied on you and your employees relied on you. How could you not control yourself to get the job done? You know what I mean? Like even in Japan, if you gotta have like overtime, the workers are trading overtime, it's not a reflection of the workers, it's a reflection of bad habits the company has. That now that the workers have to go to overtime. So in Japan, for example, they never blame the workers for overtime. They blame the company. So how can you not control yourself? You are your company. No one here in trading is going to help you with your discipline, you know, so you just kind of have to do it yourself. That's the thing about discipline. It sucks and nobody likes to do it, but we have to do the things that we don't like to do to get the things that we never had. So how can you complain about the things you never had based off of the things you've never done, right? So that's a victim mindset. So you can't play the victim. If you see yourself like you're over trading, then there's no one to blame, but how can you get better that you don't overtrade? You just need a system and a vision. Because what I used to do is when I used to learn about trading and I had my vision board, I had the MetaTrader screenshot of my mentor's results as part of my dream board. I was like, okay, you know, this guy is taking maybe like 1 or 2 trades a day and is making $1,000, right? So I'm here with my $500 account and I'm like, okay, so I just need to make whatever amount I'm making and see that profit. If it's like 10 bucks, I just imagine in my head that's $1,000. You know, because the only thing that changes is just going to be the amount of capital that you have. But if you have that consistency, making like even $10 a day, 1 or 2 trades a day, man, just think about it. You know, the sky's the limit at that point. The only thing limiting you is your capital. Like, but you already have the skill. So that's what kept me, that's what in the beginning helped me to understand that it's not about growing a small account. It's about getting a skill. Yeah, it's like filling up this range. Let's see how much it did here. It's about 65 too. Probably. Yeah, look at that, right to the T. You got a 65 hit right there, and you got a 65 hit right over here too. Boom, boom. Yeah, $1 a day. Do I see gold mostly selling this week? Yeah, we're gonna have to wait and see. The thing is, like, with the macros and the higher time frames, they need time to set up. So for me, it's already quite interesting the way we're dumping here today. But you know, like, our job as traders is not to question always so much like what price is gonna do. It's just to react to what price is doing. So if price is moving down, you're looking for sells. If it's moving up, you're looking for buys. But yeah, sure, on the daily time frame, I would like to see this thing move up. I wouldn't want to see it move down. Since we're doing like small little break and retest situation right over here, and we got those interest rate cuts on the horizon, I think we have a lot more freedom and a lot more nicer place towards the upside there. A small little inverted right here. Got left shoulder, head, right shoulder. Boom. Oh, Gordon Gecko. Greed is good. Oh, Gordon Gecko is the guy from Wall Street movie. Yeah, I remember him. It's a Wall Street movie with Shia LaBeouf. Shia. Pretty nice movie. Gordon Gecko. Hey, Moke Games. Long time. Welcome. I woke up to 530 pounds TP hit in Asia session. Nice, let's go. I might watch $1 Million Traders. It's a mini series with Anton Krill in it. Great show. I wish they made more. Yeah, I watched it. It's pretty nice, right? It's very nice because you can relate a lot to those people who are learning how to trade, like their emotions, and yeah, the whole thing. Watching the whole thing is quite interesting. Anton Krill was one of the very first guys like I really locked into when I first started trading. You know, for me, it made more sense to learn from somebody who actually had like that sort of background than getting straight into the strategy videos, just to understand a bit more of psychology and what it's all about. So that's where I really started. So I watched that $1 Million Trader thing, and I wish they made more too. Imagine being a dollar store and buying designer inventory. Daily workouts are for the mind, not the body. Yes. A CDX22, thank you for the sub. Bought 60 pips in Asia session, got out before the dump down. Nice. Yeah, crazy dumps today. Just want to be selling gold here. Zero drawdown on that too. I'm on a buy but close 80% already. Oh, nice. Let's see what's going on here. It's stuck in this small little compressed zone. So where can it go to next? It's not too much room here. Do you think it will break 4,200? 4,200 was the psychological mark that we had as targets. Breaking back below it, that's actually, didn't realize it. Yeah, but we do have 4,200 here holding. It's holding pretty nice, right? 4,200 with that break and retest, psychological mark there. I think you gotta wait. Like if it breaks 4,200, it breaks. You see, we already tapped it here once during the Asia session, playing with that area over there. See how important these zones are? It's not always the price action that you see on the charts, but it's also the numbers. So don't forget about the numbers too. First time I learned about this, I was learning about quarter points. If you guys know like quarter points, and that's when I started looking at those psychological numbers. But they do hold weight, as you can see over here. That's how people used to trade back in the day when they didn't have access to real-time candlesticks like this. They would be much better at reading like price, such as this, like an understanding where price was, where gold traded the previous day, etc. So they do hold like quite significant weight. So like if we're gonna break 4200, then I feel like the sellers are gonna give back a lot of, or the buyers are gonna give back quite a significant zone right there. So you can think of it like one of these old school war games, or some kind of like a, yeah, pretty much old school war games. So you gotta like hold 4200 right now for price to move up with confidence. But if we break below, then that's not gonna be good. Enemies are gonna be breaking the walls, coming into the castle. Bro, today only one pair is done good as USD/JPY. If you got a USD/JPY trade, nice. Let's see what it's doing here. 0.34%. That's a little breakout situation that happened too. Right over here. So currently you see everything with USD/JPY, TFX concepts pretty much playing out beautifully here. This price is moving upwards. It's a big move, but on USD/JPY, I guess like 12, 13 pips is like a big move for USD/JPY. It's like very nice breakout situation that happened there. Small little inverted situation that was here too. Left shoulder, hair, right shoulder. Volume, little SMA confluence. Accumulation, breakout, continuation. This is also a breakout that happened right here too. This is just even on the 5 minute. It's not even the 1 minute. But you can still see, because the market's a fractal, that it can still happen on the higher time frames, obviously too. So that's what we're seeing here. That was a breaky from here, and that was a fakey below here. That was continuation, break and retest. Still a scale-in method, just the same way we do it on the simulation sessions. When we're on the 1 minute, little scale-in situation here. Man, I'm telling you, it's clockwork. Every single pair, like it doesn't matter. It's like trading gold, GBP USD, AUD USD. It's all clockwork. As long as markets move the way markets move, it's like beautiful situation here too. This is GBP USD. And it's always about like how good are you at spotting them, right? Like how much work have you actually put into the charts to like see them effortlessly without actually having to put that much analysis into it. So that's the way that you want to like get used to your systems. Now obviously it takes you very little brain power. Like this for me, for example, maybe it took, this one was like very low on the gauge, maybe like 20% brain power. Yesterday's was a different story though. Yesterday we had some interesting situations there. So we ended up using maybe 80% brain power, because we were getting squeezed as well towards the end of the session there to actually capitalize on something. So that was like more testing patience than anything else. Yeah, but today was like 20%. This morning's was like 10%. Because I was watching those rejection wicks and I was just waiting for that thing to dump from this morning's trade. You see like right over here. So basically what happened was, as price was coming down on this candlestick, I took a sell on this when this candle here closed. Just to be a bit safe, I waited for it to close. Otherwise I could have got it in like right here. But I waited for it to close. So when it closed and the candle broke its lows, this is where that I got in over here. I got in, got a nice push, came back up, retested the SMAs over there, and then we got that nice little SMA crossover, A cross the 50 right over here, and then price just completely nutted. Yeah, and it was like beautiful little breakout there. You had the 5 minute rejections too off of this resistance point. You could sense the exhaustion of candlesticks, right? As candlesticks are moving up like this, then they start to get exhausted. They start to print slower and like slower bodies. Like look at the bodies. They start to reduce. You got wicks forming at a key resistance. And then all of a sudden you get the candlestick retest one last time. The highs, but look, it couldn't. It's so exhausted that it couldn't even break those highs. Right, look at this. It pushed up, but it couldn't break above these highs. So I'm like, okay, now this is it. This is when we go for the kill. Gotta load up the shotgun. Yeah, that, you know what the market is? The market's a beast. It's a beast that you only gonna get the best outcomes when it's exhausted. You don't want to attack it when it's like at full force, and it's like those games, right? Like those games where you got the top floor boss or whatever bosses you're fighting. It's like sometimes you gotta wait for the opening, right? Like when they kind of exhaust themselves a little bit, and then that's when you gotta attack. Like if you play the game Ghost of Tsushima, that samurai game, when you're playing the top floor bosses, you can't always attack them. You gotta wait for them to chill out a bit. Then that's when you hit them with your combos, right? So that's trading for you, man. It's like you're fighting the top floor boss, so you gotta wait for him to be exhausted a bit. But I honestly truly believe, like, whenever I say these things, I don't know if it sounds weird to you or if it makes sense to you, but I never used to think this way as well in the first like 2 years of trading. But it's just like something that developed over maybe my 3rd year, when I started looking at the markets more in terms of like other things related to life like that. But in the beginning, it was mostly like technical, like hardcore and technicals and just the basics of psychology. Gold fall. It's stuck. As I mentioned, we're in a range now. We're just gonna range here for a bit. It's about like a 200 pip range from this section right over here to that high. It's like 230 pip range. Hey Tetra, long time fam. I haven't forgotten about you. Just occupied with loads of work, and I'm still trading. Hey, nice to see you still around. Kwashi still lurking about. See, 30 pips, Age of Gold. Buys locked, one and done. Now the rest for me is sleeping and eating. Oh yeah, nice. Yeah, after stream yesterday, I had my chicken and rice with some nice little peppercorn sauce. And then that was just it. I was just chilling at that point. It's like right now, I just had this trade and you can literally go and do something else. Like this morning, I was on the charts for literally like 15 minutes. And right now on stream, we've been on the charts for like only 6 minutes. And we saw a setup right there. And that's it. That's the freedom, right? Like when you're going to start trading, that's what you want. You want time freedom. Because the longer you're in the market, imagine you got to deal with this. Imagine dealing with this choppiness and everything here. You see this? It's not as clean, is it? It's not as clean as this. Or like when the times that you want to come, when like everything is looking clean, like even when we came in. Even when we came in, like it was still pretty clean, like those volume confluence, boom, boom. And then now the longer you hang around, that's what happens. You see that? That's the longer you hang around. It's like a casino. You know, the longer you hang around a casino, the harder it gets. So imagine yourself in a casino. The reason why you're losing money is because you're trading in consolidations. Like when there's not enough volume. That's why you're losing money. And that's why sometimes you come and you make money, because there's a lot of volume. So just the same way as in trading, right? There's a volume like this, you're gonna make money. You might even get lucky just making money because price is moving. But we don't want to get lucky. I think luck doesn't exist in trading. Like it's much harder to get lucky than it is to be consistent. Oh, when we got lucky, I mean, when you have a minute, swoop through the server, we got some cockroaches again. There's even one in the gulag flip. Oh man, that's a problem with free things. When you make things free, people shit on it. That's why the mentorship is not free. You see, then you get people who come in and then they're gonna shit on it like this. They never give anything out for free. People don't respect free. When you give things for free, Like there's no effort that's been put in anymore. But yeah, thank you. Let's see, I think I got him. Those cockroaches. I bury those cockroaches. Scarface. So you got a buy over here. Oh, nice clean range. Beautiful. Not greedy. Secure something. BE managed. Clean range to the upside. After bearish pullback, counter trend move on the bias. Yeah, very nice. Very nice. It's actually like a perfect gift for what trading is should be like. Like you just gotta have like a small little nibble, and then you gotta take a seat back. Just a small little nibble and take a seat back. 1-2 trades a day, take a seat back. 1-2 trades a day, take a seat back. You don't gotta fight the market. Like even today, and I had this crazy move. Look at this. But didn't hold the trade. I didn't hold the full trade, but you just won that little nibble. Right? You just won that little nibble. But look at the way this thing just ran. Just completely bled off. Holy. Simply trend following gives you better chance at getting lucky. Yes, that's true. That's very true. That's why I always tell people when they are still learning that they can have a better chance when price is trending to pass their funded programs, because what I realized is people just don't have patience anymore. So with these opportunities to get funded, it only makes more sense for them to try and get lucky, right? Even if they're not profitable and they can just try get some lucky and try get paid for some time. I kind of like understand that aspect of it too, but some of them challenges run quite expensive though. You're paying like 100k funded programs, like what, $300, something like that. I mean, I had a $500 account and the whole idea was like, man, this thing's gotta last me at least half a year. So now imagine spending that much money on just one account that you're just gonna lose. You know, I think the return on investment is still diminished at that point. Life's all about probabilities, you know. It's like, what's the probability that gives you that payout? I ate half of the cake on the downpour and the other half more or less on the way back up. Hey, what's up, Kraken? I think there's no trade zone. Yeah, there's no trade zone here. You see the volume died, that's it. That's why you don't fight the market, because you just take your trades and then just call it a session. This is what you're trying to avoid right here. See like how it's compressing? Needed to stop moving again. That's the small range that it's in. Broke into this section here. Flirting right above 4200 psychological mark. Right above it. You see it's holding. But that's like at the back of its head. You can imagine if this was like a brain. That's what the market is thinking right now. It's like holding above 4200. So the buyers want to push through this with accumulation with volume. Because typically this is how volume is built in the market, like through phases of consolidation. And then also there's other scenarios like macro news, and then also red folders. And also just those random events that just come out of nowhere, like if Trump says something right now. But in terms of technicals, markets build volume through consolidation periods. And then these are the other ones, the fundamentals. Right, so this is it. So you don't really need any much of an instrument to tell you this. The only thing is you need is just a bit of skill of reading context and fractals. How the markets operate from the LTF to the HTF. And then just considering the broader scale of things. Which I know sounds like a lot of work. And people would rather pay for a book map, because they feel like it's much easier for that book map to show them like a ball here and then have that as a confluence. But this is the way I do it. I think I built my trading off a solid foundation that actually required me to put in work. And, you know, I think it paid off in the end, that I don't require anything else but just the tools given to me, which are the candlesticks. You know, we don't need indicators. We don't need anything, because I always say you can't read candles, you can't trade. Simple as that. So no shortcuts. No shortcuts over here.
We don't do that here.
Journal of your trades is absolutely crucial. It clearly shows what works and what doesn't. Yeah, exactly. Data is king. Data is everything. Sample sizing. We only speak from points of information. And if you can't prove the data that you're looking at, then what are you looking at? What are you really looking at? You know, that's why even in science, if you can't prove the data, then you know it's more less of value, and then it's like a theory. So you're gonna have a theory, and then you have to kind of like prove that theory somehow. There's a lot of people have theories. And that's why academia is so crazy too, that people are not allowed to bring new ideas. It's pretty locked off, because there's a certain way that they look at the proof, the proving. And not everybody can be an Einstein. I know in the beginning we all feel like we're Einstein, like we kind of figured out the market and nobody sees what we see, like when Einstein came up with wormholes, and science back then couldn't find ways to prove that wormholes existed, or space and time being relative, and that whole thing that Einstein came up with. Like, you couldn't prove that, right? And we all think that we can do that with trading, that we're all just gonna do things that we think is the holy grail, because you're arrogant and you don't want to learn and you don't want to spend any money, so you think you're gonna figure it out by yourself. And I've been there, and it took me about like 6 or 7 months to actually stop being arrogant. That's when I actually started putting money in the game and started investing in myself and my education. But everything takes time. That's why I'm going to say everything takes time, but it doesn't have to take time. It doesn't have to take as long as it takes for most people if you just put in the work. That's why you're going to have some people half-ass trading for like 5-10 years, and then it takes them so long to actually get things done, right? And then you're going to have people who are going to trade for like 1 year, or maybe 1.5, 2 years, and then they start seeing progress. Because like trading is one of those things where if you're going to half-ass this thing, then man, you're going to be here for the next 5 years plus, still trying to figure the markets out. You cannot half-ass trading. Still this day, there are still times when I feel I solve the market. You just gotta, man, I would feel that way like every day, like literally every day. As I said, I would have this A4 piece of paper and I would think that I've solved the market, only to find out there was always every week a change. Like a change being made, something's been kept, a change being made. And it's a bit of like a rat race, because it feels like you're never finding an end to it, right? All this adapting, all this changing. But then that's kind of what you need to do. It's better doing that than doing nothing. And it still never really ends, but I think the thing which ends is just the amount of boxes that need to be adapted. But the most of the checklist basically stays the same. So that's how I would summarize trading in a nutshell. Like maybe every now and then, like this box needs to change, so you can make it tick, and then it works for a while, and then this box needs to change, You can make like a tick over there, works for a while. Just small changes, but nothing drastic because you already have the foundation. It's like a company, right? It's a company already has its foundation. It's only when the competition comes in, let's say with AI, for example, maybe you're going to find something like a dating app will start using AI a bit more efficiently now, you know, so they can keep up with competition. There's always some small adaptations, but you already have the foundation. And that's what we teach. We teach you how to adapt. We teach you the foundation. Psychology. I'm building my journal. And when I have enough data, my goal is to build my trading bot. But first data. Godspeed, Godspeed. Yeah, quantum computing is gonna be like the ultimate trading bot there. Whenever you feel too confident in the markets, always listen to Fate sitting in the corners laughing its ass off. Yeah, that's what I always say as well. Like whenever you're gonna make plans in life, life just gonna sit in a corner and then start laughing. Like, oh boy, we got a real journey for this one here. Because when we all start trading, right, we want to make money. Like right off the bat, we want to make money. And you got life sitting in the corner. It's just like, man, it's gonna be like a year for you. Maybe it's gonna be 2 years for you. But then you can always change that trajectory. So if you're in a 2-year trajectory, you can still change that based off your habits and understanding that you need to adapt and unlearn and then relearn sometimes. So you can shift that direction. So instead of moving towards a 2-year, you can shorten that curve towards like a 1 year. Right? I mean, that's the whole idea behind having mentors anyway, pretty much. We are in the gulag. We are just chilling here. Now, how did we know this? How did I know not to trade anymore? How did I know to take this one trade over here and then call it a day? How did I know this? How did I know this? Because there's so much work that's been put in before you've seen me here on YouTube. Maybe it's the first time some of you have found my channel here today. But I've been trading now. I'm going into my 6th year. Right? So I've been trading long before I was on YouTube. So I know what happens in markets when you overstay your welcome. So based off of that data, you take that data over to the next day and then you build a good habit surrounding that. Because you know what happens when you break your rules. You start to get whips. And we don't like whips.
We don't do that here.
We don't do that here. You know, like when you start noticing trades like this as well, go into profit and then some point come and like hit stop losses, you learn from that data, right? You look at that and you say, oh man, okay, so why did he manage his trade like this? You know, why didn't he not just hold the trade? Get stopped out. It's just all based off of experience. You know, some people are gonna think, oh, why is he not taking another trade? It's because I know what happens when you overtrade, sir. Right? We know what happens. Took my first big loss this morning. So down 1.8. 1.8 what percent? Not bad, not bad. I usually take down, like, my last loss was 2.40%. Right over here. And the funny thing is that loss came from a setup that I hadn't taken in ages. It was a shotgun play on the 15-minute time frame. You see, you change something small and then look at the result that you get. And then these ones were just all consistent, like consolidation breakouts, you still get that same result. But the moment you change something, you see you get that weird result. Now that's equivalent to like an overtrade or a revenge trade, or just a trade that you may be kind of breaking your rules, right? When you change something. So the idea is like, how can you just keep it consistent? It doesn't mean you'll never take losses, because losses are always going to be around the corners, right? But how can you just remain as consistent as possible? Because the market, it has a memory. If you have a bad habit, you get a, they say play stupid games, win stupid prices. So if you have a bad habit, you're gonna win stupid prices, right? $1.8K, so 1%. It's not bad at all. 1%. If that's your biggest loss, then congratulations. You need 99 more of those losses to blow your account in a row from a opening price. How do you know consolidation breakout? It's new hourly coming in. Oh, nice. Already got a new fresh hourly candlestick, so we should be getting new opportunities here. Just got a candle break below support. That was actually quite a big dump on that candle break below support, and then new hourly opened, and don't know why it's just like looking at a wick fill over here. Well, it's not the cleanest range because this area already got tested once. You can see it right here in the middle. It's been tested once, so it's not as clean as, for example, when we got in right here. Still had that clean traffic. And we also got a few rejection wicks there too. See right here, a few rejection wicks. So it's not as clean candle bodies as, for example, what this was here for when price was moving up. Where can I take journal? I want to record my data. There's a free journal in the description box you can use. I'm down 2.57%. Down both trades, were in a plus. Lowered my risk and made 0.5% in Asia. Yeah, that's rough, because I think like when you're down for the day 2.57% and then you take a next trade and you lowered your risk and then you have a winning trade and only make back 5%, it's a rough play on psychology, because what ideally you would want to do is, if you're up 2.5%, you're going to reduce your risk for the next trade so you can protect what you've made, so you can keep your profit. Right, so if you're already down 2.57, usually the next option is to not reduce your risk on the next trade, but just to call it a day, because sometimes it could just be the market condition as well, which is really bad. So instead of like taking those smaller paper cuts, those smaller rewards, just call it a day and then just come back in with the same risk. Sometimes I almost lose like even 5% in a day. But then I wait for really clean opportunities. Correct? Like very clean opportunities I wait for. If I'm going to take that second trade, if I'm already down for the day one trade. Like, for example, here. You see this? This is a trade that I took one loss, 2.40%. That was pre-London, and then this was a pre-New York trade, where I waited for a clean opportunity where it had like a very strong confluence, and then even held my trade for 4.40%, making back the previous loss and then ending the day in blues. So I didn't reduce my risk. I just kept the same risk and then looked for a really clean opportunity. But in most cases, you don't want to do that. Like if you have like losing a full loss like this, just call it a day, then come back the next day. Like, for example, this morning's trade was also like a really good trade that I feel like if it failed, I would have been very surprised if it failed. There are just some trades where it's like you kind of know because you've been watching and trailing it for a little bit. And it's a lot better to do that because you actually understand how to read candles. You understand markets. Like imagine the difference between, like, how could I know, like, there's the way that the price is behaving here. And some of us know this as well. Usually it's like you get a gut feeling. Like, how did you get that gut feeling that you know that, man, like really at this point right here, you sense the struggle, you sense the way your entries are coming. It's like hard to explain. It's like that gut feeling we all have, right? Like you want to have more of that than rely on something to tell you that there's a sell over there. Because those indicators are always going to give you like some kind of a false, they can give you like these false confidence sometimes. So you read those candles and man, some of these trades you just know. Nothing's ever 100%, but you just know. Like for example, like how I just know right now is just not the time for like really messing around. You can't mess around with this PA. What are you currently waiting on? Right now, you see there's not enough room for price to move down. Right over here. The only price that has to move anywhere is if price closes above this resistance right over here to kind of fill that range. Got about like 22 pips. But it's stuck in a gulag because like to move down is difficult. Right? To move up there's no range. So it just needs volume. You see, I already tried to push once. You see, broke that wick. This candle here closed below support. And then the next candle broke and then it pushed like 12 pips and then it came back up. You see now the next candle, look at the way it's behaving. It's a very hard situation to be in when candles are behaving like this. So what I would say is ideally you want to see price maybe even break below 42.05. And then if you break below 42.05, at least you can kind of get a gauge on momentum coming back in. You see now it's pushing. It just filled the range down towards support. So that's kind of what you want to see. You want to see it moving again. You don't want to see it being constricted here. Hey, yo, what the hell are these wicks though? Yeah, that is it. Gotta read those wicks. See, you gotta read these wicks. What do wicks mean? I see a bear flag. What do you think? I think you gotta send in a chart here onto the Discord. Onto the best London session Discord, where you even get Goldspot pricing right here. Look at this. Got the DXY, got the Nifty 50, you got US 30. You know, the idea when we started this Discord was to create a Bloomberg terminal of the Discord, right? So we're gonna have like certain things like this. We're gonna have like certain news forums where people need to post more in there, but you also got these live notification feeds that are always being pushed out in case of anything that comes out, which is like a surprise volume into the market. You know, we got Wall Street bets right over here too. It was supposed to be like very functional Discord, but you know, it's got its own limits as well. You can't like fully have a Bloomberg thing going on here. Yeah, that was the idea. Who needs Wall Street when we have our own trading floor? Yes. I mean, you could probably like stream your own trades in here too. You got like level 5. Got a voice chat channel over here. You can probably share your screen. It's some nice video analysis. This must have been the NFP or something. Let's see how that range over there just got mopped up down towards 42, 42.05. Let's see. 4 hour. Yeah, we gotta get through 4200. That's the main thing. This 4 hours is still pretty fresh. See, it's like a doji kind of almost. Pretty fresh coming down towards that mark. So break this area over here. Continue like coming down. It was like 4163. That'll be next 4 hour support. Because those levels, as we always mention, those are like magnets, right? Those zones are like magnets. Just the way if you look at price right now, how it came towards that support, and look at that rejection it had. It just filled up this range. So those levels are going to be like a magnet for price. Like even here, as we got into this trade, it was like a magnet, but it hit like 65% of the range and then started pulling up again. I think today is just pretty much being sells. Managed to catch a position today on gold. Pretty much selling pressure. You can see how the sellers are really in the market here. If you look at these little spikes, look at that spike down there, 4200. Look at the spike right over here. Then slowly the volume starts to die out as we're coming into the London Open. Look at that, Asia, pre-London. This is London Open. One hour SMA. Nice little hourly SMAs holding. A little what do you call it? A death cross situation. That A cross of 50 from the highs there. A few rejection wicks too. You can see right here. Boom, boom, boom. Take it to the limit. Oh, nice little kiss of death on the 30. It's right on top of that candle right here. How do we go back? Oh, there we go. Nice little kiss of death on the 15 too. See, like all this Confluence pushing price down. It's on the 5 minute as well. We got all the SMAs in our favor in Confluence for that 5 to come down. The way that it did. Oh yeah, that was on the 5 right here. It was on this one. Pushes up. Boom. Gives it the kiss of death. Next candlestick opens. Boom. Melts. See, did we even have it on this position? I think we might have. Yeah, look at that. We had it on this position as well. Nice little SMA kiss of death right there. Holding price of that little fakie. And then look at this. Boom. See how it shoots it down? I call that the bully SMA. Give me your lunch money. Push you in a locker. That's how we call the bully SMA. Because a bully SMA sometimes, behaves like that. Now, when price wants to break below it, you see how bullies price, it just keeps pushing it. Especially when it's like trending like that. The price sometimes has a hard time to close above it. Big sells incoming. Yeah, it's in a range. It's a pretty nice accumulation that it's in right now. So you got some potential big sells incoming. Because man, if we gotta take 4200, 4200, you're gonna see volume come in. It's like when you watch those Wall Street movies, when you get the guys in the pits shouting, "Sell 4200, 4200, give me a sell 4200." The market's just crashing. That's the level that they want to take. So you're going to see price right now 4208, 4204, 42, 42, 40. Then it comes 4200. They're like, oh shit, you're reading it on the ticker, on your tape reading. You see, oh, 4200. Sell, sell, sell. Gold shares. Give me 6 slots of 4200. Put my stop loss about 100 points. Yeah, hell yeah, the pit. It's a luxury. It's a luxury being able to look at charts like this and read technicals. People couldn't do that back in the days. You would read a freaking newspaper. You wake up in the morning and you see a picture of the index or whatever that you're invested in. See a picture of it. That's it. That's all you get. But nowadays, man, the patience is so thin. Because you can see all the way down to the 1 minute candles. So you have very short patience now. Pull out a newspaper and see your instrument in black and white with text that you actually have to read. And you actually have to go through the fundamentals and do the due diligence and read about what's actually going on and what's actually moving the instrument. Right? You see that oh, they say old is gold. Old never goes out of style. Old is gold. And that's why the way I trade, it's the same old techniques. I still have to keep up with my fundamentals. I still have to see what's going on, what's moving the market. And then the rest of it is just price action reading, candlesticks, but nothing too nothing too special. Like an ICT fair value gap might sound very special. Nothing too special, because like the market's just moving 3 ways. It's either moving down, sideways, or bullish. Like literally, you probably heard that before, but it's just what it is, and it happens on different time frames. And I think the thing that really gives you the good trades is always gonna be just the news, because I knew that Powell spoke yesterday, and at the same time, we're always expecting days like this whenever there's something like that happens. Like whenever Powell speaks or anything of the sort fundamentally, the next day you're always expecting there to be like a volume in the market, you know? So that's why today on stream we were able to catch this little trade over here in the first 6 minutes of stream. Because of just currently what previously happened. And you can see the way the candles move and everything. It feels a bit different. It's very difficult to explain, but it feels a bit different after certain events like that. The next thing that we have is on Wednesday, we have the ADP, but we're not having a NFP this week. We got ADP, we got ISM services, unemployment claims, core PC price index, and then next week is really the week we're waiting for. Here is on Wednesday. This is it. Oh, look at that. Goldie is bleeding. We are going for 4,200. See, 4,200 psychological mark is like a magnet. Like I said, like prices in this consolidation, like if you think of it like a brain, this is what it's thinking. It's thinking, man, we got to take 4,200 right now. That's what the sellers are thinking, at least. Buyers are getting weak. Portal. This is what the buyers are trying to do right now. Hold the fort by 4205. Then the sellers are breaking through the door. You got the White Walkers. White Walkers are coming for 4,200. Will it react and pump? I think it's gonna, we already had one reaction of it once right here. This was during the Asia session. That's when the buyers came back in, right? It's like a Trojan horse. They let them in. Let them into the castle and then attack them. we're gonna wait. Sometimes it's like that. We might let them in. You know, sometimes you have to give way. Just like if you're in a fight, right? If you're in a fight, the guy's coming at you. Sometimes you gotta give way. You gotta let him come at you, right? You gotta bait him in, and once you bait him in, that's when you're gonna have a better chance to attack him. So you can imagine like similar thing that happened during the Asia could happen right there by 4,200. Like people like to trade like that. I don't like to trade like that.
We don't do that here.
I caught the move. Nice. Double bottom Confluence for a buy. I think, yeah, for the buy, you know, price is still bearish. Like, look at it in an indicator over here. It's still bearish. We're down about 0.62%. So I would still be like part of the sellers, to be honest. Because if you look at the daily candle, right, it's not rocket science. If you look at the daily candle, what team would you rather be on right now? If you go on a roulette table and you see that the roulette table has had a streak of red, why would you come and bet blue? You know, what's the probability that now you're going to get the blue? You know, if you get the blue, awesome. But you kind of want to be on the side of where the probabilities are. So who do you think has made more money here on this specific daily candlestick? Not based on what you think should happen, that, oh, you know, we're going to have a rejection over here, or oh, this and that. But like, who probability-wise has had more chances of winning trades today? If you just want to oversimplify your trading, basically, you can look at it this way. Right? So I think the sellers still have like a very good foothold. Today I'm only taking like about 2 sells. And I think the only time I would take a buy is when I align that with timing. So most of the time where I would see like a counter trend play off, like from this point onwards, is going to be the pre-New York session time as we head up to pre-New York, because market can also move in one direction forever. But if you're going to couple that with timing, then you're going to see that you're going to have a better probability when price does something different, because price moves differently at pre-London, London, and something like pre-NY and even the NY Open. You know, price can react certain ways. Oh, look at this, 4,200. We just hit 4,200. Let's go. 4,200. Psychological mark right there. We just got it to it. Already got like some small buyers in as well. As we're approaching 4,200. Trying to catch a falling knife. Because people like those types of moves where it's like it pushes aggressively. Now you can get overextend a candle like this that push like 38, 40 pips. You see? And then the idea is that it's a push so heavy that it needs to have some kind of a pullback, correct? Like I've been here, I've been there. We've all been here and there. We know what the game is. It's all a matter of like, can you consistently do that and make profit in the market, you know? But those are all things that we're going to try, especially in our first year. Catching bottoms, catching tops. But what I would recommend is, you know, just look at what price is doing right now. It just did a small little accumulation breakout from this situation here. Little TFX entry model. Based off from, you know, what we teach and what we execute on. This is a beautiful play. Basically, it's the same thing that I took right over here. It's literally the same thing. Same thing, but this one distributed so nicely. Look at that little 48, 50 pip bang over there. You know, I would say don't take my word for it. Go through the videos, educational videos, go through the WAP database, go through the label charts, and then cross-reference for yourself and then see if I'm making it up or if there's something actually there. So it doesn't look like I'm just saying things in hindsight. That's why we have a label chart. So you don't have to sit through a video. You can just look at an image that's already been labeled, and then you can compare that image to what I'm talking about. Oh yeah, look at this, man. This thing is just running over here.
Why are you running? Why are you running?
Why are you running? Taking 4,200 now. Taking 4,200. Hey, good morning, Xauusd. Holy moments. Breaking close below yesterday's low. The problem retail traders have is that they don't focus on the big picture. Look at the previous week, Friday, Monday equals expansion. Tuesday and Wednesday, accumulation distribution. For the next push upwards. Yes. The problem retail traders here have that they don't focus on the big picture. That's true. Buyers trying to take 4200 again here. Got like small support there. Maybe this is going to be the Trojan horse now. Like what happened basically here. Age of lows. I have a great selection method for red and black roulette. And today could, like, the thing is, oh man, this sells are so nice because when they run, like that position there could just keep running. It's just been like that similar one from early on today. It could just keep bleeding. Candle's about to close here in about 2 seconds. A nice little trick is as the candle is closing, like secure something. If you're trying to really squeeze out as much from the candle as possible. Because when the next candle opens, even if it's secure like 80%, the next candle sometimes can open and start to pull back up. It took over 4200. I was trying to break and retest on the lower time frame on the 1 minute. See, it's a psychological mark. There's no structure. There's no necessarily structure here. The structure is more or less this zone, and it's more of like a zone. It's not always like super precise, but it's more of like a zone. That's why sometimes you're gonna see gold like reach up towards. Sometimes you might see a situation where if you look at Goldspot and price comes up like very close to 4400, you could read some articles already say that gold hit 4400. Right? It's just like a zone, a general zone. So where this 4200 mark over here, you know, sometimes though it's like pretty efficient. Like sometimes we get these really nice sell-offs where you're gonna have another psychological mark somewhere here. Like that could be like 4200, and then you're getting your entry confirmations within that zone area over there, and it looks really precise. It's such a nice confluence to have. It's like buckled here. Ended up retesting it, kind of respected it quite a bit over there to the T, and then boom, down another 48 pips. So we're not even looking at structure, we're not looking at anything else. You notice the way we read price action here, it's pretty organic. We don't look at much of too many confusing things, because that's the thing like people are gonna affect with their trading is when they overcomplicate it. You know, sometimes you just need a few things to catch a good move. I want to take a sell, but I need a close below the old daily resistance on the 1 hour minimum before I trust it. No, don't wait too long, because you know when you don't trust something for too long, that's when you're gonna get the riskier entries. Because in the market, sometimes it's those trades that feel risky are the ones that you have to take. When you're waiting too much for the trust, it's like you're gonna miss already quite a good portion of it too. Because we're already trending, sir. Like we're down 0.87%. It's already quite a lot to not yet trust the market that it's selling off. If it was maybe 0.30, 0.20, like for me, I also take a bit of time to wait, but this is moving. You're gonna look at the dollar strength here on our Chinese indicator. Pretty strong dollar strength compared to gold, and gold is selling off. So very nice correlation there too. I already trusted these sells all the way from up here, to be honest. Let's see, commodities intraday targets / key levels. Spot gold, we're looking at 4208. Now we're below this, 4200. Key levels. Gold edges lower, dollar Fed remain in focus. Gold edges lower in early Asia trade. Price action of precious metals will likely remain highly sensitive to any indication of whether the Fed will cut rates, which will likely extend support for both gold and silver. in the near term, sentiment for precious metals will depend on whether the dollar continues to soften on the coming US labor data. Spot gold is 0.2% lower. This was posted about 9 hours ago. We're not really getting much fundamentals today. Investors now focus turns on Fed Chair Powell's remarks later today. Damn, this is all like old news. Hodl. They could not hodl, chat. They could not hodl. They let the White Walkers in the castles. That's not a Trojan horse. It looks like Rome is falling here now. Beyond 4,200. It's just a game. You know, it's just a game. Making money is a game. The only problem is money is so significant in our lives that if we're gonna have a lot of money, you see the efforts of what that, like how far that can take you if you spend it in the real world. But when you're making it, especially when you're making it in trading, it's more like, it feels more of like a game, right? And you can also see the way it flows. Like for me, this is the most closest thing to money that it can get in terms of making money, because we're actually trying to pull it out of the market, right? The economy when it comes to trading. Whereas in a business, you kind of like selling a product or like a service. So for me, I think like trading is like super entrepreneurial. It's a very entrepreneurial spirit driven endeavor. Because entrepreneurship is always at the end of the day also about capitalism and making the most money that you can, correct? But now we're actually in the matrix. This is where it's flowing. This is the river. If you think of our society on a map, money makes the world go round, right? Anyway, let's draw a circle here. Money makes the money go around, and the veins, like on Earth, we have rivers of the veins of the Earth, and in this sense, it would be rivers of money. That would be the veins of our economy. So like this is what it is. This is the matrix. These are the veins right here. So that's for me is the most entrepreneurial thing that you can ever strive for is being a trader, right? So people treat trading and they don't get the results from trading because they treat it like when people are kind of blasé about businesses, you know, oh, I have this idea. We can make a lot of money doing this, doing that. But what's your roadmap? Like, how can you scale that business? Like, where is it going? You know, like people who talk about businesses so blasé-like it's just like plan B or, you know, just something they're going to come up with in their head, but there's like no plan. That's the same way people treat trading. So that's why I said, don't get discouraged by the numbers that most people are failing in trading, is because it's just the same way they are in their personal lives. Most people are a lot more blasé about things. They don't actually like take anything seriously. In my whole life, I've always been focused on entrepreneurship, but there's been almost nobody, and actually I think there's been nobody till this day that has had a sort of like a mentality of having a structured plan towards like, you know, certain business goals, business ideas. But in school and with all my mates, everybody wants to be an entrepreneur, you know, but nobody has that structure, that vision. Like till this day, as badly as I wanted all my friends to be very spirited like that, you just won't find it. Very few people are going to find it. That's why when you start your trading journey, you're going to maybe start it with a lot of people. And then in the end, you're going to find out that, you know, you're going to be like the only one left over here. Because a lot of people are just trying it out. So you got to be able to differentiate yourself from the people who are just trying it out to the people who are going to remain. It's a damn shame, but you know, it is what it is. That's why you also look at people like Andrew Tate, for example, and the only guy he has is his brother, is his own family. You know, if you look at the Samuel Anuha brothers, it's only just him and his brother. It's very difficult to find people with that mentality. Very difficult. So you got to find it within you, you know. You don't find it anywhere else. Being consistent, showing up every day. Just putting in the work on the bad days. Being happy about those difficult days. Because we always say that the price changes, right? The price changes every day. So today maybe trading was easier for you. You had really good ideal conditions. But maybe tomorrow you might not have ideal conditions. You know, maybe you're going to have more distractions or you're going to feel a certain way. The price will change every single day. But you always have to remain stoic. And through being stoic, you're going to be consistent. So it doesn't matter how you feel. That even on your worst days, you're still better than your enemy. On my worst day, I'm still better than an unprofitable trader on his best day. That's what I mean. Because, you know, over the years, you build experience. You build a way of doing things that is going to be still more efficient. On your worst day, that's what you're looking for. Not on your best day. Not on your most ideal situation day. You know, those we can leave for challenges and account flips, but you got to find a way that you're always going to be consistent on your worst day. Even when you're sick and your head is cloudy. Usually that's not a good time to trade. But even then, you still have to be better than your enemy. NAS 100 is up by 0.18. See what else is moving over here. NAS 100. NAS 100. Daily's bullish. Still waiting. Waiting for trend. Isn't there a good buy now at 192? Gonna get a whipser. What buy are you seeing? The market is moving down. Why are you making things up? Oh my days, I was literally about to say this. I was about to say there's a small accumulation break that's happening right here. It didn't give that support that we'd like to see that happen. That would be nice right here. But the small little accumulation there. There's your buy. There's your buy. 192, you wanted to outsmart the market. There's your buy. A minute candle just dropped another 100 pips to wake you up. To tell you, hey man, you're doing some really dumb shit over here. I'm moving down and you're still looking for a buy? All right, bet. The market told this guy, bet. Bet. Another 100 pips. Not today, podcast guru. Not today. So I say if the market is moving somewhere, just flow with it. It's a river. It's a river. Why are you fighting the river? Like I said, when I went water rafting one time and then towards the end of it, the water rafting instructor jumped out and we're like, hey man, is this guy crazy? He's jumping out right now. We just came from like rocks and, you know, water rafting and everything, how crazy it gets. They was like, no, it's chill. It's chill. It's just smooth sailing from this point onwards. Like, oh, okay, nice. So he jumped in the river and then you just gotta have some smooth sailing. So you see, these are the rocks. This is the beginning. And then that's going to be when it's safe. This is when the instructor jumped out. And I was like, all right, so at this point, it should be pretty safe. So why are you swimming against the current? If you want to get splashed, you have to put yourself in a position where you get splashed, right? You want to flow with the river. Even when you start a business, if the river is flowing east, then you want to flow with the river that you got to get splashed nicely, right? Because that's your business opportunity. Because you see with AI, maybe something with AI is going like east. So you got to see, how can we go east? Right? You're trying to go west. You're trying to say AI doesn't work. AI is not good. Blah, blah, blah. You're trying to fight the current. When you fight the current, that's what you get. You get whips. It's the same way when Uber came in and started going to all these countries and all these local taxi drivers didn't like Uber, right? Because of commissions and promo codes, etc. They try to fight that. They're fighting the river, and you see what they get? they're looking at their buddies who are getting all these notifications and they're so busy all the time because they're on the app, right? They're going with the flow. Then you got this other guys here who now play the victim, and then they start blaming companies like Uber for everything. So you got two decisions to make in life, right? It's always about making ones or zeros. You're making a yes decision or a no decision. And you know, no decision is going to have its own challenges. But I don't know where it's going. How can I follow along? It's literally going down. Like you don't need anything to tell you otherwise. Like even if you look at the line graph here, what direction is this heading? Like I think a lot of the time we like overcomplicate our trading. What you feel, and I'll tell you exactly what it is that you feel. You feel FOMO and you feel fear because you've missed out on these moves. You haven't had an entry or a strategy we could have gotten you like in here or maybe in here. So what you feel is you just feel fear and FOMO, right? You're afraid. You're afraid because you don't have sample sizing data and you feel like you've already missed a move. That's all that it is. So this has just used to happen to me a lot. During 2020 when I was trading GJ would move like this, and then I would also feel like, oh man, what do I do now? You kind of are a bit confused, right? At this point, you're like, should I take a trade? Is it too late? You know, like, what should I do? And let me tell you something. Number one, you need a time that you're coming into the market, and you need to master this time, right? Because if you're coming in now, if you constantly come to the trades at like 4:40 p.m. East, 4:40 a.m. Eastern, there's a chance that you're missing already moves from the London Open. Right, so you have to understand, first of all, especially a time you trade. When I trade, I'm looking for time when I can get the inceptions, mostly the inceptions of the broader move. So there's a specific time that I trade. That's why we even caught this move here this morning. Right over here, so we pretty much caught the top of that whole move downwards from this morning. Right, a specific time that I know like I can catch those bigger picture moves at the inception. And then the second time is the London Open time, whereas there's a way I look at the London Open time. It can either give me that continuation or it's going to consolidate. Usually those two things that happen there. I can either catch the consolidation on time to catch that bigger move, or I get stuck in consolidation, then it consolidates to like pre-New York. And pre-New York's another time for me where price can give me certain reversal plays. So if we just move down, for example, like this, I'm coming in pre-New York in the next 1 hour, 20 minutes. Then I know during that time, I can actually look for my counter trend moves because prices are moved down, right? But I wouldn't be looking for counter trend moves like at this time. So you need to master your timing, understand how the river flows during that time. And then you need obviously a strategy. A strat, like how can you get your entries, because you can't be doing what ifs anymore. Because now if you're showing up on time all the time, you can't be doing what ifs and hesitating, because when you hesitate on your moves, then you still put yourself in this position where it's like price is going without you, but you're not executing. So you need a strategy and a playbook to hold you accountable to if you're actually following the rules. All right, those are just the building blocks to dealing with things like FOMO, fear of missing out. Because you know, if you miss the move, you miss the move, right? If you didn't follow your rules and you got a playbook and you understand the timing, then you can comfortably say, I hesitated during that time. So what's to come next? You're gonna have a better thought process of how you're gonna approach the next move. Like basically, the best way I can explain it to you was yesterday I hesitated on my entry models. Remember we spoke about how, you know, this range was supposed to fill up, but I overlooked the fact that we're already kind of moving up from previous days in New York session time. We're actually trading above the NY session highs. So there was a lot more confluence here for a break and a retest on the 1 minute to distribute to the upside. Right? There was this move that we were pointing out right here. So what it was, and also there was this pre-London, but it came in a little bit sooner than when I'm coming onto the chart, which is literally like right here. But let me see the break. Oh no, this would have actually been a good execution, but I think that's below yesterday's New York session highs, because yesterday's New York session highs was like right here. So that would still be a bit sketchy. So anyway, let's just say we don't take it. This would have been the next opportunity above that. But then since I missed that opportunity and I still had the timing and everything, I still was able to now look at it from a perspective of, okay, if I miss my move, what is the market doing right now? How can I be patient to wait for my next move? So you see in this scenario, what did we do? We waited. We just looked at the pullbacks as Confluence for the buys that we're looking for. Which this was a 5. I'm trying to see where we actually took the trade. So we missed that one. This was at 546. 546. 546. Still a bit ahead. Oh, we got the break. So you see, since we knew like this was how we fumbled. We fumbled the first position, and we're just watching price. And then price started to push up. It started giving us a trend, pull back, and then this is where our entry was, right over here at that break. I think I also pushed for like around 20 pips. So it was the last attempt before price accumulated, because we had already missed or fumbled the first entry. So that was the second one. So we gave it some time in between to see and read price. And since price, this is a different market condition. You can see it's not trending as heavily as today. So it's kind of nicer, because even as we were getting our entries here, the daily was only flipping to 0.40%. Whereas right now gold is down 1.02%. So it's a slightly different market condition. But when we took it here, the daily was flipping bias. Daily bias was flipping back bullish, 0.40%. And we were just patiently waiting for the market to show us direction. Now, because we have a strategy and we know we couldn't get in anything here. So we still had to wait for the entry confirmations here. And given the context of the broader market, the daily hadn't moved that much. So it was still a safe entry to take, even if you fumbled the first trade. Right? So in a situation like this, if we didn't take, let's say, this first trade over here, then we would have had to found a way to get into this next position. But the idea would be, if you miss this first trade, then the second entry is not too far off, right? It's not too far from the place that you potentially fumbled, because in the broader context of the market, it hasn't yet had a move. And that's the point I'm trying to get across. It hasn't yet had that move. But let's say if you fumble, let's say that first entry, you fumble this one, and then you're taking one down over there, you really have to look at your psychology and maybe just call it a day. Because at that point, if you're just missing moves, that means you're just not confident to execute. But the important thing is like you actually have something to hold yourself accountable, right? And then I think like through reiteration and different contexts that the market gives you, that's how you start building your edge. That's how we call an edge. Because you can teach somebody a strategy, you can tell them what to do, but they still need to be able to fully understand it in and out, like truly understand it. Because you can understand a lot of the things that I'm saying at face value, and you're not understanding like the deeper parts of it, because you haven't yet put in as much work as you need to put in. Because we're all looking at the same charts, correct? But we're all perceiving them a bit differently. Maths and chemistry, thank you for the sub. Posted simple analysis to Discord. Let's see, already caught a day worth of sells, but it has a bit more to go. Nice. Ooh. Coming from that inception, Goldspot in the 15. 4 hour flip bearish. This is the inception right here. You can see it. Sorry, it started bleeding off from, but definitely could have been more refined. But I think like as a 15-minute entry, I think that would be it right there. As price started breaking those lows, little accumulation distribution. You can even see the market did like a small little retest right over there before it just bled off here. But it's distributing from this area, this general zone. You see how it broke below? I think your entry would actually have been here. Because if this is the if this is the range that it needs to break, these are the wicks it needs to get through, then that's the wick that needs to break, which have been right here. Then boom, 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 boom. Move down, but anyway. 4-hour flip bearish and already broke yesterday's low and now looking to find liquidity below last week's low. Nice, nice, nice. Pretty big swing this is. I think the fact that Powell... I don't know, what did Powell say yesterday, Chad? I didn't watch the thing. But I think the fact that Powell came on yesterday is really aiding in this broader move that you're talking about here to play out. So you got to know the difference between like technicals. Hey, thank you for the membership. Appreciate it. You got to know the difference between this as a technical setup and this as one that's coupled with macros. Right? So sometimes we're really good at lying to ourselves that the market moves or the world economy moves based off a trend line bounce. If you're trading off a 4-hour daily time frame, we convince ourselves that that's why that market moved so aggressively. But you might not know that there was something that actually helped you, like a catalyst with the fundamentals that helped push price. And I see this mistake being made by a lot of traders. So many traders make this mistake. It is insane, especially the ones who are trading the higher time frames. They actually believe the world economy moves based off a trend line bounce. Because you know, when you're trading a higher time frame, you're trading macro fundamentals, right? Most of the time you're trading some kind of macro fundamental. You see, that's why when we did our analysis over here, that's why we're quite confident to say that this week, when we made that video on my channel, that this week was heading up towards 4,200, you know, because the macros were in line for that. As the easing was increasing from 30%, it jumped all the way up to like, what was it, 70%? And then that was in line, and also the technicals were in line. So then you're going to have these kind of better anticipations. And you see how that's shifted? I don't know what happened with Powell yesterday, but now that's shifted and like the daily's pulling back heavy. But we still have easing at 80%, so just gotta wait and see. That looks clean to buy, model and sell model. Hey, to each your own. If you think price moving down like this looks cleaner for buys, then you know, by all means go for it. I subscribed. I bumped into your channel today. Am I let to get in the trade? Yes. You have to join the stream at the London Open. Right? That's when most likely you're going to find me already in a trade. That's when we're taking the trade. Or not already in a trade, but that's when we're taking the trade. You're going to see like that 3 a.m. Eastern candlestick. When that London session opens, stream is already on. And we're most likely looking for positions. Like this one was executed at 5 minutes past the London Open. You got to lock in. Remember, you got to be consistent. If I trade pre-London at a certain time, know the signal is coming out at that certain time. If it's like London session, the signal is coming out at that certain time. Or it should. It should. It should. So how many trades down? About 4. What trades we're taking over here? About 4 trades in December. Is that H1 make manipulation before distribution? No, it wouldn't be manipulation. This price is just coming down. There's no manipulation here, sir. Not yet. There's not enough structure to base manipulation off of. You know, the thing is, like, people read the charts very like zoomed out sometimes as well. That you know, the problem, like when you do analysis from such a big way, like when you zoom out a lot, like I think some of us kind of like zooming out like this or something of the sort, and you kind of get jumbled up with higher time frame, like trying to understand higher to lower time frame analysis when you're zooming out like this. So that's why it's very important for you to send in a chart. If you think there's a liquidity grab, because I can't read your mind, you need to send me a chart. Because I understand the journey of most people's trading. Like when it comes from, like, you know, this guy, for example, he's pretty zoomed out over here. He's on the 15-minute, but this is not 15-minute time frame. Like, this is, when you're getting these many candlesticks, this is already moving beyond the 15-minute time frame. You know, this doesn't look clean. That looks like spaghetti. But if you go on a higher time frame, then you're gonna start having less candles, and you're gonna see it suit a higher time frame a little bit better. Correct? But now looking at this same image, now you're looking at the 15-minute, it just looks a little bit out of place, in my opinion. So that's why it's really important to send in a chart. So at least I can see. Trust me, chat, I've been through the trials and tribulations. I've been through a lot of what y'all might be going through as well. The only thing I haven't been through are the struggles of ICT, because I never traded ICT, so I can't relate to you when it comes to ICT. But just like basic higher time frame, lower time frame, understanding trends, what liquidity grabs are, what candlesticks are, what wicks are, support, resistance, like all that I fully understand. I wouldn't understand if you come up to me with a fair value gap or an inverted turtle and why that's not working. I have no idea. Gotta send a chart in. And trust me, we all go through the same things. Because all of us are all retail traders, so there's a pool of information that we all get access to when we first start trading. And there's YouTube University. But YouTube University never helped me become a profitable trader. It was only my own experience. It was only my own paper trades and watching something happen over like 2 months, and then started to execute slowly on those ideas that actually helped me become a good trader. I never found a YouTube video, like 5-minute strategy video, that helped me become a good trader. I used to watch live streams like this, because during live streams like this, you understand better the psychology of waiting for price action and what it takes to actually be consistent and disciplined. And you just start naturally getting better. It's like the same way if you hang around with people who make money all the time and all they speak about is money, like you naturally start picking up on a few things. Dollar is melting. Let's check out DXY. Dollar looked like it was about to do a reversal play here on the monthly though, as it's slowly accumulating below support. A little consolidation situation right here. The only thing is missing with the dollar is like a candlestick to do this. Boom. Just needs to break back above. Then it's going to be back inside the gulag. See, the dollar has just been holding. Doesn't want to melt. Because it's already broken the key level. It's like that 4200 zone. So think about this as a 4200 on gold. Like how it just broke down that psychological mark and you saw how that played out. So this is like a similar thing. But I think this is like, this says 100 right over here, which I think is also pretty valid. So we can just go with 100, lining up pretty nicely with structure there too. Let's put a few zeros over here. And you can see how that also lines up beautifully with daily closes right over here. So that's like your 4200 mark for the dollar. So you see the sellers are still holding. Hodl. Now it's the sellers who are hodling. You know, first it was the buyers. This are buyers on gold. And now you see, now it's the sellers on dollar index. So it's not inverted. As the buyers are trying to come in above 100. The white walkers. So that's the thing that dollar's got to hold. And when is it going to break above 100? Keep tabs with the news. Watch what the news is. Watch how this jobs data is coming out. Wait for the next FOMC. The next FOMC is probably going to dictate what's going to happen here at $100. See how it's just holding? It's waiting for news. FOMC most likely. But with the rate cuts, we're expecting dollar weakness. So we should see price do this and then respect 100. Damn, but you know, that's going to lose some value here. We're going to go back into the double digits from 100 to like 90s. Damn. Holy. Gonna lose some momentum. You got to be smart about these things because this is what happens and this is what politicians do. When the dollar weakens, you'll hear politicians talk about how they've made the economy so great in their term. Little do they know that most people are not financially literate, so they'll just take the politician's word for it and say, oh, but he actually made our currency stronger as being the new president, because most people are financially literate. They're not taught things about money in school. And that's just a fact, right? It's just a fact. And if you go to business school, you're learning from a syllabus which is 10 years old, most likely. And the world changes basically every year, as you can see. So what happens is politicians know this and they also take advantage of that for their own games. So I've seen it already happen quite a few times. But this is a natural thing that's happening against the dollar because the dollar is a standard. So it's a very nice excuse that they can be used for their campaigns. Right? But this is just a natural progression of where the dollar has been heading this year. It's been weakening. The dollar has not been doing great. You can see it in the price action, and with the interest rate cuts, it's only going to get worse for the dollar and get more good for exotic pairs, like maybe dollar, Mexican peso, or just some kind of exotic pair. Or like even other major pairs like dollar AUD, or Australian dollar will probably increase. Canadian dollar should probably go up. USD CAD, NZD USD. NZD should probably go up once we get the FOMC, because we're going to get dollar weakness, and it would be what we'd be expecting from NZD USD to go bullish. You can already see it's been overall down, but you can see since we've been having a shift in potential rate cuts, like probabilities increasing, you can see on the daily how it's already increasing a bit of strength there on the NZD. NZD USD. Hey Tetra, you're the man. Last week you did analysis on NAS. How is that going? Is there any correction between NAS and gold? NAS? Oh, NAS and gold price action? Oh, NAS and Bitcoin? I don't think that there is. I think people like to think that there could be like some kind of correlations, but what would the correlation be? I don't think there is. I feel like Bitcoin moves based off its own secluded fundamentals. I'm not even exactly sure what those are, but it has its own special fundamentals. It's not like what we look for in the dollar, strength and weakness, right? That doesn't really affect Bitcoin, like FOMCs and stuff like that. It doesn't necessarily affect Bitcoin. I think this is based off of sentiment, mostly this market, and specific data that it gets. But that's why I love gold, because gold is so much easier to read. It's like a lot more straightforward. But let me see, NAS 100. Damn, Daniel. NAS filled up the range. Beautiful. Up towards like 25k over there. See, really nice range fill. See from here, nice little break and retest, accumulation breakout to the upside. This is actually the trade that we called out. I don't know if it was you who asked for the NAS analysis last time, but this was a trade that we called out, the fake out that happened below here to fill the range. And then price pushed upwards, and then little dip over here, came back to retest a accumulation point. It's a high confluence area. That's why we take our entries where we take them. They're pretty high confluence areas. So the market comes back because it's not forgetting about these guys. So it comes back, retests them. You even see it on a higher time frame, literally on the 1 hour chart, and we're saying the same things I mentioned on the 1 minute chart, right? Because the market's super intelligent. It can do all this on the higher to lower time frames. So you're not escaping it. If you have an idea in your head that the higher time frames are safer, then good luck. But you're not going to escape this black hole that is the market, and it's going to suck you in just like it sucks everybody in. So the best you can do is learn how to read the higher time frames and also learn how to read the lower time frames, because it operates all pretty much the same. All pretty much the same. I used to think that the higher time frames were a safer time frame. Then I realized, like, over the years, it's not the case. You're just gonna get bigger stop losses on the higher time frames, and you're gonna miss the moves that start from the inception of the lower time frames. That's all that it is. So you're really relying on volume and direction on the higher time frames, which are coming from macro fundamentals with big stop losses. That is. I'm telling you that all I'm telling you is my God's honest truth. If you guys disagree with me, I would love to hear why you think that I'm wrong about saying that. And then, you know, it's a really good place to start a conversation. So you don't have to take my word for it. If it doesn't make sense to you, then awesome. But you have to make that your response makes sense, and that we're not just beating around the bush just to argue for the sake of arguing. Because some people, they love to do that. They love to argue just for the sake of arguing. But I like to find solutions. I'm the kind of person, if you come to me with a solution, I want that solution to work for you. So I want that solution to be the truth, you know, because I want to move forward. Because some people, you're going to come with them with solutions, and then they're going to come with you with more problems. You know? Yeah, but this range, all right, so that got filled up. There's another little breaky situation that happened here too. Boom, boom, boom. Another breaky situation that happened here too. So accumulation distribution again to the upside. Now it's stuck within this range. So this is where NAS is currently sitting. You have a support over here. You got a resistance here. What is it doing? It just had some nice little moves within these shorter time frames. See that? Look at that. Look at that. You see this? This is how I can work on your psychology. You see this? It's the same thing. It's just, you know, it's the same concept, but it's done slightly different because there's just more space. The only difference here is there's more space in between. That's the target. What happened here? Let's go on full screen. What happened here before the move, before the inception? Price accumulated. Then it broke, and this was a target. Correct? So if you understand that, that's already pretty powerful, because now if you're going to look at this, then you're going to see where I'm coming from. So you got to look at this, and you're going to see like that's the range. But now if we take a step back, let's take a step back and see where it is. It's accumulating right now. So what do we know about these accumulations? Because it's going to happen in different shapes and sizes. If you look at this, look at this one, look at this one, look at this one. It's going to happen all in different shapes and sizes and in different contexts. See this right here within the range inside the valley? How much nicer is that? Right inside the valley with the target all the way up over there. How much nicer is that? That's the same reason I gave my analysis on Bitcoin. And that's why I'm saying, like, okay, for NAS 100 analysis, is this thing is setting up to skyrocket again, right? Context is slightly different, but it's pushed up and there's bullish momentum. So it's accumulating to keep pushing up over here. Once it gets towards like 25,500, breaks this wick over here. It's trying to break out of those zones to keep pushing up, right? I can take you even to something like BTC. What's this? What is that? And where is it happening? Inside a valley. Look at that same distribution. What is this right here? What have we just covered on NAS? It's literally the same thing. Literally. You had the first breakout on NAS. It distributed inside the valley. As price was moving up, it had a secondary opportunity to get in on the HDF, and it distributed up again. Like, concepts work on all markets. It's only if you want to see it. If you're going to take the blue pill or the red pill, that's all that it is. Blue pill or red pill? I'm seeing a subscription of monthly towards signals. Is it open? And what platform do you send? Oh, we got WAP. We're on the WAP database. We got a Telegram and Discord over here. Those are the main channels that we use in the exclusive. Do you think we're going to see a continuation? This is at 5 a.m. candle. Usually I like to think of this candle like people going off for lunch. Because they're a little bit, that 5 a.m. candlestick Eastern candle is a bit slower. So I like to think about it that way. I like to think about the pre-London trades as the early risers, you know, and then the London open trades are kind of like the ones who are coming to breakfast, like when there's still food. You know, like when you go for like a hotel and you're an all-inclusive hotel, you come in early and everything is like fresh and ready, right? If you want to sleep in a little bit, you know, you can come over there and you still get food, but you can tell that it's like towards the tail end of that food, right? You can still get food, but it's you feel like you woke up late. Correct? So that's what I look at it. And now the 5 a.m. candle is like we're chilling now. We're by the pool, like everyone's chilling, everyone's doing their activities, like this is just not the time. Right? And then the next hour is now going to be like a early lunch. That's going to be pre New York. So getting early lunch over there. So the market moves in a similar fashion in a sense. So at least Goldspot does on these key times, which is like from 1 a.m. Eastern, the pre-London time, and then London Open, and then 6 a.m. Eastern for the pre-New York for 2 hours up until the New York Open at 8. Am I playing Battlefield? I'm not playing too much Battlefield at the moment, no. Oh, what is that? Oh, Black Ops. This is Black Ops. Oh, Black Ops. No, I haven't played Black Ops 7. My last Black Ops I think I really dug into was I think it was Black Ops 3. Yeah, Black Ops 3. This is the last Black Ops that I really played. There's really nice maps too here. Oh, Black Ops 4. Yeah, I played a bit of Black Ops 4. But definitely stop playing it around this Black Ops. Remember this beach one? I don't know how 5 looks. Yeah, I definitely did not play 5. Definitely did not play 6 or 7. Black Ops 0 is awesome. Yeah, that was nice. You got these classes over here. What did I used to use? I think I used to use mostly the Tempest. Tempest was pretty OG over there. It's got this War Machine guy. Oh, War Machine was actually pretty good. Just like spray. You don't have to be as accurate, right? You got those arrows. I never liked to use the arrows. I think this chick was pretty good too. I didn't mainly use a Tempest though. Oh no, actually probably a War Machine. Because you get more of like... Wasn't this the guy who like shoots out rocket launchers or something? Oh no, here's the guy who comes out and then bangs his things on the ground. Oh. Oh yeah. Yeah, no, it's pretty good. Actually, he was pretty OG because like guys would camp inside these rooms and you can go get all those kills with just, and it's pretty fast as well. Gravity spikes. Yeah, that's the name. The cool thing about the Tempest shot is it can electrocute those who are next to the player who gets shot, right? But gravity spikes is quite easy to use. When New York 8:30, I'm open yesterday and took London high. We swept previous month's high and failed. So London swept the New York. Oh, okay. Monthly shift. You don't need big stop losses on higher time frame. You need to enter the right time in the direction of the higher time frame and hold longer because you've entered the higher time frame narrative. Yes. Yeah, you could have a tighter stop and then hold your trade based off higher time frame volume. But most people who trade off like an hourly or 4 hour, they're gonna have like bigger stops. Like even on gold, like think about waiting for a 5-minute candlestick to close and you want to have your candle above that previous 5-minute high. Like look at this, that's already about like 60 pips. To me, that's already, it's big, but it's because there's so much volume in gold, you can still see the distribution. The reason I'm saying it's big is because gold doesn't typically move like this. Typically, this candle here would be like 10 pips, 15 pips, right? On just normal years. But this year has just been insane. Like a simple candle like this already like 60 pips. So huge difference. So like people who started trading this year, they're gonna find this condition like really nice condition to be in the market. Like this is their normal. Like having a 5-minute candle this big. My normal is like 15 pips, 16 pips, 10 pips. But hopefully gold stays like this for the next year, for 2026. Which I think it will. And hopefully we're going to get another pretty good year over here. Because, you know, as Trump is president, Trump needs to make money. He's a businessman. So we just get rich off the rich getting richer. That's all it is. So Trump would definitely, like, we're going to have a lot more scenarios where we're going to have chances for disruption. Because Trump loves disrupting, right? See what he did with Venezuela the other day? Someone was saying how he was trying to lock down the Venezuelan airspace. Trump loves disruption. Rich people love disruption. It makes them a lot of money. And we like disruption too because we get to get rich off the rich people. You know, we're just kind of rich. We're just kind of rich. But really wealthy people, the ones who are moving the markets, that's like, they're doing this for themselves. And we're just like riding the waves, right? We can't compete at that such a high level. All retail traders, everyone that you know, we're just like here. We're just riding the wave. That's all that we're doing. Super wealthy people are not out here. You don't know them. Not trying. He did close the airspace. Crazy. Crazy, crazy. That's why we love Trump, though. Gives us this really good opportunities. You know, people who hate Trump? People who hate Trump are the same people who always have problems for every solution. If you think about it, those are the people who hate Trump. Right? Those are people who really hate Trump. But if you look at life in a sense of like, okay, as a trader, I think it's very difficult to get wrapped up in politics because we shouldn't really have like we like Trump or we hate Trump or we like Putin or we hate Putin. It's always like, what are they doing and how is that affecting the market? And how can we capitalize off of that? So you don't have to like anybody because money has no emotion, right? Money doesn't know if you've been good or if you've been bad. That's why bad people have a lot of money. And that's why good people have the least amount of money because money doesn't know the difference between good and bad. So if you're in an industry where you're dealing directly with money, you have no room for your emotions. Because if money doesn't have emotions, why do you have emotions? Why do you feel FOMO if you miss out on a sell like this? If money doesn't care, why do you care? You know, money doesn't care if you woke up this morning, had breakfast, and meditated. Money cares if you're disciplined, consistent, showing up and applying yourself every day. That's all that it cares about. You know, for me, right now, I like to keep my money. So that's why you don't see me taking another trade right now, because I keep my money. You have to respect it and be indifferent from it. So yeah, that's it. That's it. If you had a profitable day today, that's all I say. You're part of the small group of people who can end the day profitable. Why over risk that opportunity to end the day profitable? Because even if you end the day with 1%, you're still going to bed with 1%. You're going to wake up tomorrow with 1%. Then you can scale that 1%, make another 2%, another percent, that's 2%. Call it a day. Wake up the next day, maybe you lose. You're down 1%. But the idea is like, how can you keep your money in the long run? Because maybe the next day you get 2%. Now you're up 3%. Right? Now you're building good habits towards making money. You're going to be doing a lot more stress-free trading than the other guy who's chasing the money. Who's trying to make like 1% and then wants to make another 3%. Because his equity curve is going to look more crazy. Yours is going to look a bit more sustainable. So for me, 1 to 2 trades a day, 3 maximum. In a month, I'm looking at about 25, maybe 35 trades. It's still a lot of trades. But you see, we're moving correctly. We're moving slow. At the end, you see the bigger picture and you're like, damn, you took 35 trades this month? Holy, sounds like a lot of trades. But all I did was 1 or 2 trades a day. When you go to the gym, right? Go to the gym for a year. Try go to the gym consistently for a year, 1 or 2 times a week. People at the end of the year are going to look at you and say, damn, Daniel, you've been hitting the gym every day? Like, no, bro. Just hitting the gym 1 or 2 times a week. That's all that it is, 1 or 2 times a week. And I did that consistently for a year. Like, damn, man, you got buff. Only 1 or 2 times? Holy, that compounds. You see, like right now we're starting slow. Look at this, only 4 trades. End of the month, aiming for another 20%. Hopefully. Maybe 15, 20 plus, if there's going to be volume. See, all of this is just 1 or 2 trades. End of the month here with 40 trades. Took 40 trades in this month of October. Then September, only 1 or 2, maybe 3 max. There's 48 trades. You know? And guess what? The rest of the day, it feels like you don't do anything, because today I was only on the charts for like 15 minutes for pre-London, and I was only on the charts for 6 minutes for the London session. So literally like 21 minutes out of my whole 24 hours. I've only spent 21 minutes to actually make money so I can pay my bills at the end of the month. And, you know, whatever else that I need to do. 21 minutes today. That's all out of a whole 24 hours. That's all that it takes. Some days it's less than 21 minutes. Some days it's more. But on average, you want to give yourself at least 1 or 2 hours a day to catch maybe, okay, for 1 or 2 hours, I would say at least like 1 trade. At least 1 trade for 2 hours, right? But if you're trading multiple sessions, then let's just say in total, yeah, another 1 or 2 hours. But you see, it's kind of hard to say because you can sometimes get your 2 trades in a total of 21 minutes. Because every hourly candlestick with my strategy gives me at least 2 opportunities on average. You know, at least like maybe let's just say 1 or 2. We'll give it a range of 1 or 2 per hourly candlestick. So in your head, you've given yourself in the day 2 hours for the session, but you know you can be done for the session within the first, let's say, 20 minutes. So you don't have to be a slave to the market. You just have to know when you're coming on and when you're getting off. Then the market will tell you if you're making money today early or if you're making money late. But since you've given yourself a time, you can wait. It's not going to be hard. I think the hardest thing is for people is to wait. That's the most difficult thing that traders struggle with the most, is just to wait. So that's why you have to paper trade. Oh, I don't know why this is moving slow here today. Damn, why is Zoom moving slow? You gotta paper trade, and then demo trade, or like learn. Wait, I think I gotta restart Zoom. This thing is moving slow. Can't keep up here. Majority of your day should be spent looking at charts and looking at the way price is moving. At the same time, binge watching educational videos. That's what I used to do. Okay, now you see it's back. Yeah. At the same time as you're watching educational videos and you're learning, you're watching the market. You're seeing how it moves. So as you're learning, you're watching the setups. All right, see you, Ricardo. Take care. And that's what it is. Like literally for the whole time that on your first year, that's all that you're doing is educational videos and watching the market. Binge watching that. And when you're not doing that, and when you're doing other things, you're listening to audiobooks about like psychology, just general psychology. And then, but when it's your time to go, when you have a certain time in the market that you're trading, whether that's a London session or the New York session time, that's now your time to prove to yourself that you're on the right track. Now that's time to put the education aside. That's the time to put everything aside and just be on the charts with yourself and see if you can actually just execute with confidence, without hesitation, and with some kind of a consistency. Right? This is a natural progression. What I'm telling you is nothing out of the ordinary. You're already doing this, most likely. Some of you are already doing this. Majority of you who really want to learn to trade are already doing this. Right? Because that journey is the same for everybody. And that's how we rack up our 10,000 hours. For me, 2 hours in chat, but the trade took 2 minutes, 46 seconds, high quality, no heat, straight TP. Yeah, nice. Like, you know, for me, this trade, what is this? We're only in the trade for 1, 2, 3 minutes. That trade only took 3 minutes. Most of our trades are going to take like within the first 10 minutes. It's going to be done. Then, you know, like, what are you going to do afterwards? I like to hang around, you know, watch markets and just see how it's behaving. See if like my paper trades are playing out or if they're not playing out, or where I could have gotten caught in consolidation if I try to overtrade. That's what I like to do. And man, I've been doing this for almost 6 years. So imagine like 6 years. I'm going into my 6th year, but now imagine doing that for that long. You have to get better. You can only get better by being consistently doing something. You cannot get worse. You know what I mean? Like, you can do anything that you want with consistency. No setups. I think that was like the last push as well, like this move right here. But it wasn't the cleanest move. But I think the only way to execute off something like this would be just to rely on the flow of how volume is distributing, just anticipating it to keep pushing down. But since that last one, market has not really done anything here. It's just kind of like swinging up and down. So the real structural point was right here though. Because, you know, that's the idea behind the way I trade. I'm always trying to find like the inceptions of the moves. So I think that's like inception right here. That was the cleanest move as well. Just the same way we caught this one this morning up here, which is the inception of this move downwards. And then understanding like what does price usually do before it gives you these distributions. So we got one definitely like right here. And then here it kind of missed out on a important aspect towards the end. And also distributed from this like higher time frame one. That was like right here too. That's why there was a lot of power in that as well. You see, like once it started breaking, entry confirmation on that candle down here. Notice the way it just like pushed down with a lot of pressure. Here, pushed down about like 31 pips on the entry confirmation. Right, it's quite important to understand what I'm talking about, because if you don't know what I'm talking about, if you haven't been with TFX concepts for a little while, maybe like a month or something, then I'm explaining it in a way that I kind of anticipate that you know what I'm talking about it, so we don't have to get like super detailed about it. So you can just kind of like see it. Because sometimes you just want to be able to see it, right? Like if you see it and you know. That's how you execute with confidence, like every single time without hesitating. Like sometimes you're going to come like literally 6 minutes onto the chart. We saw it, we executed, simple. So that's kind of the idea behind taking off the analysis from the trading view. Because I'm pretty sure some of you men, like, if you're still coming onto the charts and doing a higher to lower time frame like this, it can be quite a grueling process, right? And I used to do this. I used to set aside for myself 15 minutes every day for pre-London when I was still learning the trade to do my higher time frame to lower time frame analysis. So every single time, imagine doing that for 15 minutes, marking out your weekly zones, daily zones, 4 hour, 1 hour, all the way down to the lower time frames. You know, it's not efficient. So you kind of have to be okay with seeing naked charts and understanding more of the concepts behind that too. Because when you start to draw lines all the time, they're creating you like biases in the market. And those biases will make trading more difficult for you. But if you take that off, just like Bruce Lee says, the best technique is to have no technique. And only when you reach a level of mastery, you truly start to understand the value and appreciate the value in that. But in the beginning, you want the more complicated things. You want it to look technical. You want the technical stuff. You know, in the beginning, that's the mindset. You know, when you look at a golfer, you know what golfers love to do? They need the best club. They need the best balls. They need the best gloves that show you how to swing. You know, they're so focused on the technicals, they're forgetting that the best technique is to not even have a technique, to work on your mental game. You think Tiger Woods? Man, you give Tiger Woods the most shittiest club, he will still school anybody on the golf course. You know, because he's got his mental game on check. It's within him. The technique of not even needing to have a technique. When you have all these guys trying to emulate certain swing patterns. You know, so that's what you're working towards. And as a trader, you know, the thing about being a trader is like, you have to be above average to be a successful trader. You cannot be average. You cannot be below average and expect to make money. You have to be above average. It's just one of those things. So you can't always rely on the tricycles to get you there. Sometimes you have to remove the tricycles and start looking at naked charts a bit more. Because if you can't see it on a naked chart, then what are you really looking at? You should be able to see it. And it takes time as well. Like actually, if you trade the 1 minute time frame and you have to draw these levels, it actually takes time away from what you should be focusing on, which is like proper risk management and just making sure you got the right lot sizing, making sure your entry models are the way they need to be and the breaks are happening with volume. It takes away more time to draw those things than it is to focus on actually executing. Because those are two skills, right? You got two skills. You have one skill, which is your analysis. People focus a lot on this. And then you got another skill, which is the execution. Right? So these are two different fields, analysis and execution. Because you can have amazing analysis, but you're not executing on your trades. You're predicting where price is going, but you're not executing on your trades because you haven't realized these are two separate skills. Analysis and execution. It's a whole different thing. You can analyze, but you can fuck up the execution. You know, or you can hesitate or something's going to happen over here. But you can't forget about this part though. And the scary thing about executing is it's not always going to be as straightforward. You know, sometimes you have to wait for that additional confirmation. So what I did, for example, for today's trade, I used the Ricardo technique. So Ricardo, he would wait for a candlestick to close first and then use the break of that candle to confirm the entry. Right? Whereas for me, I would just take it off the break. Correct? So today I use the Ricardo technique because I saw price push down, but I wanted to see with a bit more confidence that, okay, if we truly break these lows, then I'm going to get in. And you know, I had that out of the back of my head because I knew that this is something that happens, and only when Ricardo said it, it made it more obvious to me that that was something I was missing. So took advantage of that opportunity as a little shotgun play on the accumulation breakout to give myself more confidence. You know, sometimes y'all are like rushing your execution too much. If you wait like 10 seconds, maybe even like a minute, you start to realize you could avoid a lot of the unnecessary losses that you're taking if you were just a little bit more patient. And then just see if it's a liquidity grab or it's not a liquidity grab, and then execute when you start getting the follow throughs again. That little Ricardo technique, you see like right here too. Boom, close below support, then break of the lows. Right, but in this situation, I'll also be in just on the rip. Like as soon as it breaks those wick lows, then I'll be stuck in. But it kind of lined up nicely with that. Yeah, Vic, today morning I analyzed the fall, but then I got into a buy. Oh, late, got some whips. Yeah, sometimes you gotta do that. You're gonna analyze the sell, and then for whatever reason, I don't know what it is. It's like that devil that comes on your shoulder and it tells you that you're gonna do something else now. And yeah, it always comes back down to keeping things simple. Clear mindset. If you don't have a clear mindset, you can't like trade efficiently. Right? Because the market's really good at like squeezing you out of trades or trying to squeeze you out of trades or switching up the structure on you. So most simple, less analysis, more you're doing that inner work, that you're seeing it in your mind's eye. I think that's where real trading understanding comes from. You know, and it's unfortunate because I know people on the stream are probably waiting for me to draw some lines here on the chart so they can see where price is going to go. But if I'm being honest with you, there's no setup. So there's no need for any lines right now. Like price is just accumulating from here to here. But if we're going to draw a line, then I think what I can leave you with is we have a resistance here by 41.92. We might be looking at 4200 level as a magnet for later on today. So keep an eye out for this level, because if price starts to break back above with our pre-New York time, then that's going to be a good confluence for a potential reversal, like pull back up, and then maybe the New York session can continue to take it lower. So you're going to have pre-New York break above this, use 4200 as a magnet, potentially look at filling this range. Like we've already covered on NAS 100, we've covered this on Bitcoin. I hope you understand that. because that's what happens on a daily basis. It's looking at these ranges here because there's sellers in the market, and the market doesn't like leaving these people in profit for too long. It's going to mitigate that area like we saw happen on NAS 100. Right? It's going to look at least to mitigate that area. So I think with the timing, pre-New York breaking above here, we can mitigate some of this push down as we're coming up towards like 4208. And then maybe the NY open, because NY and the session opens always act a bit different, right? That's why sometimes you're going to have London come like this, break a key level, then reverse. NY can do the same thing. It can break like a key resistance and then reverse. So that could be the case with NY over here to continue maybe a bearish trend to the downside. Taking off a buy right here could still be a little bit risky, although it would be like a reversal play on the support. See how I broke below that support, but if a candlestick was to break back above, such as this, and the next candle break the highs, it could play out within this mini range, but that's going to be the first buy attempt from this bearish move. So it's more risky than if you actually saw like some kind of like some supports being formed as price comes up above here. It's 41.92. Because remember, price still bearish. Price still bearish. And if you look at this from a line graph perspective, it's still creating new lower lows. Price is literally still moving down. So if you get away with a buy here, I think timing is going to be like the most important thing. And we have about 20 minutes for pre-New York hourly candlestick to open. Because this hourly candle is still bearish. Got about 19 minutes. It's always nicer like when you're approaching these levels, like even if the hourly candle, let's say, pulls up like this, pulls up like this, then you get a new candlestick open up, boom, 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 and you're trading with, man, and this is such an important lesson. I remember when I used to do this, in fact, like the way I always used to want to trade in line with the hourly candlesticks. Like that was one of my rules, that the hourly has to be in the direction that I wanted to take a buy or like a sell. And you know, up to this day, it's still pretty important. Pretty important because when you're taking a buy here and then your hourly candle is going against you, then it's like it's a lot harder to have that to reflip than if the next hourly candle open and then start doing something like this. Correct? It's gonna be a lot easier for price to start moving up in that scenario. Man, but there was a time that I had like really nice win streaks. Just waiting for the hourly to be in my favor in Confluence and just trade with the hourly direction. Reversal. Yeah, I would like more of a pullback above here. Pullback above 41.92. Yeah. Pull it up. Or just respects those areas and then continues to not. Already down like 1% on the daily. So if you're looking at a daily target and you think price is still going to sell off, your daily target is going to be probably like this daily support here, but like 41.60. That's most likely where the daily could go. And by that point, it's going to be down about 1.73%. Which is quite achievable for gold. If you look at this previous daily over here, it did about 1.95%. Right? So all these things that I'm telling you, I'm not making anything up, man. I'm showing you examples from different instruments, and I'm showing you like how those are repetitive patterns which happen over and over again. So it's not coming from a place of wishful thinking. It's coming from a place of this is a very strong possibility for the daily to do. Because you know what some people do? They're going to do analysis on the daily and then have daily targets here by, let's say, 40.80. But you know, what's the chance that a candle in the daily will come all the way down to like 40.80? When was the last time you even had a daily candle that big? You know, like here, you've had one here previously. This was in Friday 14th. Or Friday the 14th. But what's the probability? Right, it's still less a probability because most candlesticks don't have that kind of volume. Actually, you know, on average, gold's volume is 400, 500 pips on a daily candle. That's like an average on gold. But since this year has been so crazy, You're getting candlesticks have like 1,200 pips on the daily candle, but that's definitely not a norm. That's just insane volume. I don't think people truly understand how crazy that gold market is right now. People think 70% is, they say like, oh Vic, but you know, you're up like 300%. Bro, like 70% on gold is nothing to my 300. I mean, it's way more than what I've made this year. Because it's the amount of money that's being moved. You know, when a hedge fund moves like 5% a year, man, the amount of money that a hedge fund moves, it's on a different level. It's a whole different ball game. You know, it's a whole different approach to trading. You cannot look at it like in terms of that's being little or something, right? Because it's different performance than your own performance, the way that the market moves. But 66% on gold is huge. That's a huge number. If a hedge fund can do 5 or 10% in a year, 66% is just nasty. Think about the amount of money that's been moved. Holy, that's why you're seeing like candlesticks over here move like 100 pips. That's a 5-minute candle that just moved like 100 pips. Look at these crazy dumps over here. So that's the thing about gold, and that's why in December I'm going to be trading gold, because gold has so much opportunity, and I think December is still going to be the same thing. We're still going to be getting a lot more setups here too. So never feel like you're missing moves. Like, trust me, there's an abundance of moves. The river's got to keep flowing, and we got to keep swimming. These are golden pockets for golden pocket for buys down to at 4,100. We also got like a small barrier here, like if you notice, price came down, like fill some of this wick, got like a bit of a shield going on. It's looking at its first attempt to fill the first bullish range. This one's a lot more achievable because it's smaller, but it's still risky because it's the first one. It's like about 36 pips. About what you say about looking far ahead. But look at my analysis gave in Discord. I used a 4-hour and the market got there and a bit more. Your viewers would have made 200 pips. Oh, nice. Yeah, I know you can send in your analysis here. But where is it? Which one is it? Gotta send in a label chart. Oh, the wordy one. Yeah, but you know, like the thing is, like, how could anybody make money when you send the after picture? Like, that's already happened. You should send the analysis, the before and then the after. Because if you just write it in a text, no one is gonna see that and interpret that, because you know trading is a visual thing. If you're gonna have the before and after like a chart like this, it's a lot easier to see because it's all like visual, right? You have like some tool like this and then you say, okay, like buy above here, it's all more easier to interpret. And also say like a 5-minute time frame. This to me is easier to see. If someone was to like even send me this, then for me to look for the numbers like 4189, 4181.42, because it's easy, because you see the structure. And that's like when you're backtesting as well. Usually when you backtest, you don't really remember the numbers. You're just looking at the structure like, oh, I remember. So if you remove all of this analysis here, it's like, oh, I remember we had a sell over here. I remember that wick. Oh, I remember like price topped off over here where we had that sell at the double resistance. It's like a very visual thing. Or like, oh, I remember this was when I was explaining that thing to Wardy about how to send in the chart. Remember we had these two 5-minute double tops with like one wick breaking above. Yeah, but I'm gonna call it a day here. Catch you guys tomorrow. Let's do it. Let's get it. Yeah, I think I might call it a day. I don't think I'm gonna take another trade today. I'm gonna take whatever money that I made. I'm up about, let me see how much percent. About like 1.48%. So yeah, I'm just gonna run. I'm gonna run. I will see you all tomorrow. Take care, everybody. Don't overtrade, don't over risk. Adios.
My boy,